is there any shortcoming that you would like to bring to Mr. Breedlove's attention when it comes to money being a unit of account with regard to Bitcoin's utility?
Yeah, so for a unit of account, it would mean that you keep track of prices and everything in money. And you can do that with gold. I mean, it's been done in the past. I mean, you could price products in gold. In fact, when currency was backed by gold, a dollar price was a gold price. In fact, in the United States, in the Coinage Act of 1789, the dollar was defined as a weight of gold. It was a weight of gold or a weight of silver. We had two metals that were legally, constitutionally money in the United States. So the dollar was defined two ways, either as a specific quantity of gold or as a specific quantity of silver. And so all prices were obviously in gold and silver when they were in dollars, because that's what the dollar was. But in order for a money to be a unit of account, right, it has to have a very stable value, over time, and particularly over shorter increments of time too, because you're negotiating. You go to a store and there are prices, right? This is $10, this is $12, this is $20, and the person who puts the price on the product is pretty sure that even if you don't buy that product the day that they put the price on there, that if you buy it a couple of days later, there's still, the dollars that you're going to pay are still worth what they were when they put the price. But Bitcoin can be very volatile. The price of Bitcoin can fluctuate 5 or 10%, sometimes in a day. Generally, it's not that volatile, but you never know. Nobody prices anything in Bitcoin. You don't go to any stores, even if you go to a Bitcoin conference and they're selling merchandise, nothing is like, this is 10 Satoshis, this is, whatever. It's all dollars, right? Nobody prices goods or services in Bitcoin, because you have no idea, what the Bitcoin is going to be at any point in time. It's just too volatile to be used in that, as a unit of account. So it's not. And so that's one of the reasons it's not money. I mean, and in fact, a lot of the Bitcoin community will concede. They say, well, yes, Bitcoin is like, it's not going to be a currency. It's just going to be like gold, right? We're just going to hold on to it and store it, because you can't really use it for any of those reasons. It doesn't really work as a unit of account, a medium of exchange. So it's going to be digital gold. That's how they've reinvented it, as digital gold. But it's not digital gold either. That's just what they're pretending.
Mr. Breedlove, when it comes to a unit of account and Mr. Schiff's point about the significant volatility that Bitcoin has that gold does not necessarily, what do you have to say in response?
Yeah, let's answer volatility next, but I want to focus on unit of account for this response. So
yes.
Based on my reading of the work of economist William Jevons, he said that gold went through basically 4 evolutionary phases. That initially it was a collectible, then it was used as again, store of value, not a term that I like, but something that's used to move purchasing power across time. Then once enough purchasing power had been stored inside of gold, it started to be used as a medium of exchange. And once its use as a medium of exchange became widespread enough, people started to denominate prices in gold as well, making it a unit of account. So this is the evolutionary path of analog gold. And I think Bitcoin will follow a similar path, right? Initially, it was a joke, collectible. You could go click these Bitcoin faucets online and get free 50 Bitcoin. Eventually, it established a market price pegged to the cost of production initially. It's then since become a very potent store of value, or means of moving purchasing power and increasing purchasing power across time. It's the fastest growing asset in human history. And I think as more purchasing power is stored on the Bitcoin network, it is increasingly used as a medium of exchange. The data would bear this out. I want to say, fact check me, but I want to say $4 trillion in transactions have cleared on the Bitcoin network to date. Could be wrong about that. And so as Bitcoin becomes more widespread of a medium of exchange, it will eventually start to be used as a means of pricing, which is a unit of account. So unit of account is basically the function of money that enables price discovery. And price discovery is optimized to the extent that private property is strong, right, and unbreakable. And so Bitcoin is like one of the strongest forms of private property, meaning specifically an asset that is very difficult to separate from its owner and impossible to inflate, I think it actually optimizes price discovery and therefore maximally serves the function or optimally serves the function of a unit of account. You could capture this in Wittgenstein's ruler, right? The importance of the unit of account. He says, if you can't trust the constancy of a ruler that you're using to measure a table, then you can't be sure whether you're measuring the table or the ruler. Right, so we need something that is constant and inflexible in its supply to quote unquote measure. You're not actually measuring, but you're appraising economic value in the marketplace. And gold's been good at that. You know, I think if you denominate things in gold historically, you can strip out the last 10 years of fiat optical illusion bull run by just denominating the S&P returns in gold, for instance. And I think Bitcoin just perfects that by having all things denominated in a fixed supply money, which is fixed at 21 million.
We're going to do two more.
If that's the case, you know, everything is lost like 99% of its value. So it's hard to say that Bitcoin is a good way to measure anything when it's just a massive speculative bubble. I mean, the market's not down 99% because you want to price it arbitrarily in Satoshis, you know.
Well, it is for those that have held savings in Bitcoin. Prices of homes have declined 99% for me in my savings, in terms of my savings.
No, it's, well, not your savings, but you bought a asset that appreciated faster, right? And so, yes, if you sell your Bitcoin, yes, hats off to you if you got in 10 years ago and you rode it all the way up. I mean, you know, that's great. You know, that's great for you. It's unfortunate for whoever buys the Bitcoin that you sell, right? Your gain is their loss. But yeah, you know, you got in early and made a lot of money, you know, on that. But again, the Bitcoin itself didn't create any value. It's just a transfer. It's a transfer of wealth from the people who get in late to the people who got in earlier. I mean, that's what's going on here.
If you enjoyed this clip, click here for the full episode and here for more just like it. Also, like this video to help shine light on the corruption of money and subscribe to stay connected. Thank you.